Gold continued its bull run last week again, facing the support at 1910-1908 zone. It has seen a massive reversal and has moved close to 2000 levels. Yes, it has achieved close to 1998 and has closed the week at 1981-82 level. Yes, this is the resistance zone, and none of the candles we have seen in last multiple weeks closing above these levels. Once again, these levels proven out to be a stronger one. At the same time, gold is still trying to trade in this long term bearish channel. So what to expect from gold next week? Can we expect a third bullish candle? Is it going to go past 2000 levels? Which position you should take in order to profit? We will see with the help of and indicators, as indicators do suggest that what price action can be expected. As you can see, price is staying above the moving average. Weekly stochastic is also rising. The MACD is also on the verge of a crossover, and this is important. As we can see, it is almost yielding the waves, and this is the red part of the wave getting completed. So can it cross over and move on the upside? Everything we watch till the end, and towards the end I will give you the trading levels and strategy in order to profit trading gold next week. Watch till the end. Let's This time we are also including 4-hour charts. You can see on the 4-hour charts a couple of observations here. See this move, then the breakout, then this is the bullish move, and it is staying within the zone. Also, if you look at the 4-hour charts, 1972 levels, which is the 50% retracement zone on a long term charts here, it has respected these levels so far on the 4-hour charts, and breaking below these levels. Yes, the next support levels is at around 1954.50. I will come back to the 4-hour charts later. Now look at the day. On the daily charts, see the base at 1945.50, what we have seen on the 4-hour charts, and on the daily charts you'll find the support at 1910, 1908. See, after forming the support, after forming the slight retracement, it has resumed its upward move. Now if you look at the movement, see candle size has diminished. Yes, the last candle was a bullish candle, but it failed to stay bullish, and it is closed with a body size less than 50% of the complete move. Yes, it is less than 50% of the complete move, which suggests that the prices are not willing to stay. But at the same time, we must note that there is a great support here on the downside, first at around 1972, then below that around 1963, 65 and 54. Remember, these were the resistances we talked about while the prices were below 1950 levels, and these are going to be the support levels now while on the down. Now let me just show you the Fibonacci levels on the rise which we have seen last week. See, this was the top, this is the bottom, this is a good rally. See, 1953, again these levels are the same which we have discussed. The same levels are coming out on the Fibonacci levels also. So it appears that the price perfectly respected this. Below 53 it's 1942, and then 1930 levels, very strong support levels. So yes, as long as 1920 levels are respected, we are not going to treat gold as bearish for now. Yes, even if it retraces on the downside, 1920 is the first level which is going to play a major role here. Also, if you look at the daily charts closely, see lower lows here, then the lower highs here, and this time it is in fact breached past this channel and it resumed the rally. So 1920 levels are again going to be a very strong support levels here. Now let's have a look at the weekly chart. On the weekly chart, see at this point I had mentioned that this is a reversal side. Also 1800 we have seen it was a great support precisely from the same levels we have seen this reversal. Now one point you must note that after staying in this flag formation, gold has given a breakout this time, and this is a bullish breakout. But at the same time, one must note that it has come closer to the greater resistance levels here. Yes, these are the greater resistance, and if you consider this as a complete movement, you will find gold has stayed within the box for long now. So there is a probability that it can retrace a little on the downside. But at the same time, see on the daily charts, maybe it can retrace a little. However, if you look at the weekly charts, see first bullish candle, second bullish candle with a smaller body size, and there could be a possibility of a third bullish candle with a further smaller size here, which suggests that 2020 levels are going to be the now next milestone, and the prices might limit itself between 1970 to 2020. That is the possibility that yes, the candle might remain green but with a smaller body size and with a minuscule movement here. So this is something which we should watch out for. On the downside, 1950 definitely a great support. It was the resistance earlier, now it is going to remain a great support, 1950-54 levels. Now let's have also look at the monthly. Now if you look at the monthly chart, see if you trace the complete movement, first we have seen lower lows, See all these three candles beautifully aligned here. Now you can see higher highs, these two candles beautifully aligning here. Now the median is close to 1900 levels, which is now the median only below which we can treat the bearishness. We can expect the bearishness in the gold. As long as 1900 is respected, we are not going to treat gold as bearish. Now if you look at the complete move, if the top of this is again at 2020 levels, which is going to remain a greater resistance. This zone here at, rather I will say, for next month, but this month, in fact, the highs here at 2000 are going to remain critical, and there is a possibility that 7 trading sessions for this month are left. We can expect a retracement on the downside. A breakout about 2000 and then 2020 levels is going to be treated as an extremely strong reversal of price or for gold, and then it is going to break past all-time highs again. If not this month, then possibly next month. So yes, a retracement from here is what we will be looking forward to. If it retraces here, certainly we can expect that for next month it will try to create a room. At the same time, this will also indicate that still the swings may appear in the next month, because see, lower lows are seen here and higher highs are seen. Now let's have a look with the help of indicators. What does the indicators? If you look at the indicators on the monthly charts, prices retraced towards 20 period and have reversed now again, suggestive of bullishness. If you look at the complete movement, it is staying within the box for almost more than a year now. See, this was the price last October, November also. We have seen such price levels, and again this time it is back to the same levels. This is the zone in which it is trying to stay, and the moving averages are far below, staying bullish so far. The stochastic has dropped a bit and now trying to recover, now trying to look upwards. At the same time, look at, see on MACD, many a times I have mentioned here, this was the bearish cycle and it has seen a crossover earlier this year and stayed bullish. Now if you look at the complete momentum here, you will find gold has seen this crossover at these levels after long time. And if you look at the rally previously, after crossing over from these levels, we have seen stronger moves here. Now if you look at the monthly charts, it tried to converge, but again looking forward to diverge. Is this the indication that it is looking forward to a rally in the coming months? Possibility exists that it may continue to diverge from here and scale on the upside, which suggests more bullish momentum. RSI is rising, suggestive of bullishness. Coming to, if you look at the weekly charts here too, the prices were divergent. It has completed this move here and now now if you consider this move from the bottom, what we have seen in the recent times, you will find that 2020 appears to be the 76% retracement level and could be the potential next target zone. While if you trace the movement from the triple bottom levels to the peak, you will find 1973 definitely was a critical level and it has breached past this level. So far it appears that the bullish momentum is still there. If you look at the stochastic, after forming double bottom, it is rising, suggestive of. Also, the interesting observation is coming from MACD here. See the wave. Now this is the red part of the wave is completing and it is on the verge of a crossover. Yes, this crossover can bring bullishness in the near term. There is a probability to it. We have seen every time in our analysis. But at the same time, one must note that it has not yet crossed over. What we have seen on the monthly charts, that going closer to it, it has started to diverge, and this could be one of the possibilities that if it is bearish, we may see a red candle next week, and then the bearishness is going to resume in gold for the near. So next week is definitely going to be a decisive factor. RSI is rising, suggestive of. And coming to the daily charts. On the daily charts, important observation is the crossover between the 20 and 50 period moving average coming at around 1904, 1900 zone. Great support levels are seen here at 1900, 1920 levels. Very strong support levels are seen. Also, if you look at the Bollinger Bands, you will see the prices staying outside Bollinger Bands and have closed within the bands here. This is suggestive that now there is a pressure from the top side which it may succumb to and can retrace a little on the downside. For the coming week, for first couple of trading sessions, we can see a slight bearishness. A stochastic overbought, this also calls for a slight bearishness to prevail, but it does not mean that it is a certain thing. Now look at the MACD. This has crossed over here, traded with divergence so far, stayed bullish. And if you look at the complete movement, you will find, see the waves here, and it has retraced strongly. Now too much of divergence calls for it to converge too much of divergence calls for it to converge, and hence probably couple of candles, red candles can be expected from here, when where the prices might retrace towards 1965, 1954 zone, and in fact below that further bearishness can also be seen towards 1940 levels as well. But still it should not be treated as bearish, it can potentially bounce back. That is what I'm suggestive of. As long as 1900 is respected, we are not going to treat now gold as bearish. RSI is over. Now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy for you all. And before I provide you the summary and the trading levels, first, you can also learn this art of trading by joining my mentorship batch. 26th batch started on 16th of October. 27th batch is going to start on 28th of November. Register yourself now itself. Limited seats are available. Invest in your learning first, which can reap the profits for you for lifetime. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. And if you appreciate this effort, you can press the like button, do share, subscribe, and comment. Your every like, share, comment, subscribe is a motivation for me to deliver twice a day update on gold. I share my targets and analysis twice a day for gold. Definitely, it will aid you in your trading decisions. So do watch that as well. Thus, press the bell icon or join my free Telegram channel for live update. With that, let's start. Now, the buying entries for next week is at 1986 levels. Beyond 1986, 1991, 1998. Now these levels we saw last time as well. Again, we are repeating these levels. And beyond 1998, this time I will be looking forward to 2018. This is a greater resistance. In between, before 20, there is a next resistance at 2005, but beyond that I will be actually looking forward to 2018 levels, which is the next resistance zone for gold here. You should be mindful of this. These levels are certainly going to remain critical for gold. And if it breaks past 2018, we are looking forward to the next highs at 2042, and then sky is the limit, 2050, then all-time high levels at 2075 and plus. The chances appear to be less that it is going to rally towards these levels. I expect a consolidation, which we expected last week also, but it failed. It is stayed bullish, and thus staying and trading as per the levels is always the key strategy here. So yes, achieving 2080 also, 18 also, it can reverse. You have to note and watch out at these levels. On the downside, I will recommend you to sell here at 1970. Two levels below this, 1965, 1954. Now this is crucial. If it stays below 1954, 1950 zone, I am including this as well, then only little bearishness, and that too 1944. So these three levels are going to remain crucial. On the upside 2018, on the downside 1944-54 zone. If the prices drops below 1954, that is the point where you can say that the bears might try to take over. We can look forward to 1930, 1918, and then 1910, 1904, and below that a crash, complete crash can be expected. The chances of this also appears to be less, but yes, these are markets. If it can rise, it can drop as well. The faster the rise, the faster the drop, and hence you have to trade with caution. You have to stick to the levels. This is the zone you should be careful of on the downside, and on the upside 2018 levels. Be careful within the zone. Trade with the levels, trade with the trailing levels, trailing stop losses. Do like, share, subscribe, and comment. Join my mentorship batch and signals channel. Reach out to me for any of your trading or training queries. Thank you very much. Have a great profitable trading week ahead. See you with the twice a day updates on gold. Do watch that as well. Thank you.